What's up? So check it out. I want to talk about banks and money today. Okay, so I think a lot of people have a misconception of how a bank and, how just the basic economics of a bank, right? See, because there's all this stuff going on right now, especially with the whole Silicon Valley Bank, that bank collapsing. They were incredibly over-leveraged. They were over-leveraged for actually like so many reasons. Lots of people want to speculate. Some people want to speculate that it was the money that they donated to BLM. Some people want to speculate that it had something to do with the policies that Trump put into place. Some people want to speculate that it has to do with what Biden did. Ultimately, and some people actually try to blame it on inflation, which I can't even rationalize that at all. Like I said, when it comes down to it, what you need to understand is the basic economics of a bank, which for some reason so many people don't get. So a bank by definition is loaning money. So they've got to have capital in the background. They've got to have liquidity, right? Most banks loan more money than they've got. And that's weird, right? Because you as a person on the outside, we sit here, we're not running a bank. We're like, how does that make sense? How does it make sense? Because nobody thinks about what a bank is. 90% of their capital is loaned, right? They don't have most of their money. So when they bring in money and then they cover all these different things, now, you don't have to worry about your money because your money up to $250,000, $250,000 is automatically insured. Your money's safe. If you have less than $250,000 in the bank, your money is protected. By law, it's insured and it's taken care of. Now, what the problem is like I said, the bank loans out money. So when you go to a bank and you buy a house through said bank. When you buy a house, let's say you're buying a reasonably nice house. Say $400,000. It's on the lower end in a lot of places these days. Say you're buying a $400,000 house. You put down, let's say you put down 40, right? You put down 40, you put down 10%. You're buying 400. So that means the bank is financing you $360,000. They don't have $360,000. Not altogether when they have done that for how many different people, right? But they pay for your house, right? They pay for your house. You're paying them back for the house they bought. And so they're constantly, most banks are upside down. They have loaned out and paid for more things than they actually have. They don't have enough capital to cover everything. But they're getting payments from, everyday people like us who are financing said houses, said cars, personal loans, business loans. They got all of us, just regular Joes, right? And we're funding them continuing to fund other people. It's an endless cycle. Now, the weird thing is under circumstances, the bank can be called to liquidate assets, to back up said loans with said dollars. When you've got a multi-billion-dollar leverage. So you've got billions and billions and billions, tens and 20s and 30s and 40s of billions of dollars leveraged, right? But then when they're like, okay, so how much money do you actually have? We got about 4 billion. We got about 7. We got about, it's like that's when you get to the point that you're in a bad place. Because the reality is at any given moment, theoretically, you should be able to cover all those. Most banks never can. Most banks never can because most banks over leverage themselves. Now, like I said, you could speculate for all kinds of different reasons. Misappropriation of funds, mismanagement of funds, investing in the wrong places. Sometimes it's policy. Sometimes it's hostile takeovers. There was, that happened to Dave Ramsey. If you don't know his story is pretty cool. But he had multiple different real estate properties. He had all these real estate properties, but he was financing them all because he would start leasing one, start making some money, get another one, start making some money, get another one, start making some money. And it just went around and around and around until he had all these different assets, right? All these different properties that he was bringing in money from. But the thing is, he didn't own any of them. He was financing all of them. And while he was financing all of them, he was financing all of them from smaller local banks. Those banks got bought up by a big corporate bank that basically did a hostile takeover. They stepped in and bought these places. When they bought those places, then Ramsey's, he no longer owed a debt to these banks. He owed a debt to the new daddy, the one who bought in, the one who took over. And so when that happened, he ended up not being able to pay all he owed, and he lost all his properties. This can happen. These things, should you worry about your money if it's in a bank? No. Our banking system is still superior to so many others. Yes, there's things that could always be better. But you're looking at, some of the banks over in Europe where there's a negative interest rate. You literally are paying money every month in order to keep your money in said bank. There are several people who have to keep banking over there. People like Cardone and O'Leary, they keep money in bank accounts over there in order to do some of their investments that are in Europe. They've got to have European banking. It's just kind of how things have to be done. And they literally are watching money disappear from their balance because it's a negative interest rate. They owe money to the bank for the money being there. People complain about our interest rate being so incredibly small just because it used to be higher. But yeah, now it's incredibly small. Small is still better than negative, right? Do you have to worry about your money being in banks? No. Like I said, if you have under $250,000 in the bank, you're insured. Now, if you have more than $250,000, real simple, you should be insuring your money. There's different places you can, there's different methods to insure your money, but ultimately you look into that and you can talk through your bank, things like that. There's things to get that in motion, but people who have $250,000 in the bank aren't normally worried about that. Most of them already got an accountant or a financial advisor or manager who handles these things. It's the people who don't have $250,000 in the bank that are worried and panicking and freaking out. And do they have something to be concerned about? Yes. Is it a big deal? No. Because at the end of the day, in the economic structure of our country has been through this before. And it's going to survive. It's going to last. It's going to be okay. Now, I know there's a lot of conspiracy theorists out there, and there's a lot of skeptics and naysayers who say, you know what? There's a problem with our financial system, and it is broken. It's a gray area of brokenness. It functions, and it's working. It could absolutely work better, but it is working. There's things that need to be done. There's policies that need to be put in place. There's things that need to be adjusted, fixed, monitored better, all these things. But is it working? Yeah, it functions. It works. It does need to be better. Should you worry about your money because a bank closed down? What does that mean if my bank closed? Look, let me run through a couple of stats for you. Banks close, okay? It happens. And you see it more in recession periods and things like that because they get in a more tighter situation of everybody needs liquidity. Everybody needs the money. Everybody needs things to flow, but they're not flowing fast enough. 2008, 25 banks closed. 2009, 140 closed. 2010, 157 closed. 2011, 92 closed. 2012, 51 closed. Okay, just 4 years ago in 2019 and 2020, 4 banks closed each year. 2021 and 2022, no banks closed. We've had 2 close already. Silicon Valley was the big one that just happened, and there was another one that closed before that. It's only March. So 2 by March, it's picking up a little speed, but this is not the crisis we were in 2008. This is not the depth of an economic decline that we saw in 2009 or 2010, or even 2011 for that matter, when it dropped down to 92. 92 banks in 12 months. 92 banks in 12 months closed. We've had 2 in 3. We're going to be okay. Like I said, Silicon Valley, there's a number of different fingers you can point and say what they did wrong, how they did it wrong, and what could have been done differently to not get them in this place. Is it because of BLM? No. Is it because of Biden? No. Is it because of Trump? No. Is it because of a compilation of all kinds of different things that were like 1 little hit, 2 little hits, 3 little hits, and ultimately, eventually the bank was out of hits? That's it. That's what happened. So could have all these things helped if they were in a different position? Absolutely. But at the end of the day, this happens. Right now, I don't know if you've heard, but Bank of America is Bank of America is getting a little questionable. Some people are already starting to sell off their stock in Bank of America. Why? Because rumor has it the Bank of America is in trouble. Why? Because there's a lot of things going on right now. There's all these different things in the economy that are happening. There's all these different things in the nation and in the world that are making people question things. People are getting scared. People are getting nervous. People are buying into conspiracies. People are worried about what the government will do. Worried about what the banks will do. People are worried about everything. But because people are worried about everything, people are moving money around. Different things are happening. And Bank of America is looking like, for Q1, this first initial quarter, for those of you who are unfamiliar, it's the first 3 months of the year. So at the end of March, which we're only 2 weeks away, it's already looking like Bank of America is not going to hit its profitability like goals. Their numbers, last time I checked earlier today, had not been officially released yet, but it's mid-March. They still have till the end of the month, but they haven't had any official numbers released. But there's speculation that they're not going to hit the profitability level that they were hoping to. That's their goal, their benchmark, right? That's not good. So because people hear stuff like that, they see stuff in the media, people are already worried about the stock market. So now you got people selling off. I'm cashing in my BOA. I don't want something to happen. Cashing in my BOA. Can't sit back. Oh my gosh, I don't even know what happened, but the number's going down. I better sell my BOA. Let your boy break it down for you once again. The majority of the people that are dabbling in the stock market don't really know what they're buying into. If you're concerned that BOA is not going to hit its profitability level, and you're concerned that puts your money in jeopardy, moving your money to a different bank would make sense under those circumstances. But if you're worried about that happening and that's the reason you sell a stock, then you're missing the reason to buy a stock in the first place. Do you really believe that everybody is just going to bunk out right now? Everybody's going to take their money and run? Everybody's going to get out of BOA? I'll tell you, I bank with BOA. And BOA is one of the big hitters, man. It is. It's one of the I think it's like top five banks that people who have over 250,000 or millionaires, it's where they bank. It's in the top 5. So am I worried that everybody's about to withdraw all their money from BOA? No. This isn't what causes banks to go under. Missing one mark doesn't cause a collapse. But it can be a chain reaction. And it can set some other things in motion. Is that what's going to happen with BOA? I don't think so. Like I said, when you look at 2008, you look at 2008 all the way through 2012, and then you look at 2019 and 2020, at the end of the day, what was happening? Why were these banks failing? Why are there so many other banks that are still here today while all those banks are gone? It's because there are economic changes. There's changes in the economic climate. There's changes, things that are happening in our nation, in our country. There's things that cause people to be worried, cause people to be scared, cause people to withdraw from the wrong reasons. There's things that cause people to buy in or cash out when it comes to the stock investment in said company or bank. There's all these things, all these many variables that come into play. And when it comes down to it, something like a recession can be no big deal for those who are ready to adapt. But it can be a crisis for a bank who doesn't know how to adapt. So that's why there's been so many banks that have struggled, so many banks that crashed, closed, that gone, while others continue to thrive. It's a matter of the adaptive nature of these executives, the people actually calling the shots in the bank, people who are going to say, okay, what are we going to be able to grow with? What are we going to be able to adapt to? How much can we change and move with this rolling climate, this economic change, the structure that was thriving and we see it crashing? We hear that word thrown around a lot, the crash. The economy's crashing, the stock market is crashing, Bitcoin's crashing, crypto is crashing. Everything is crashing. Things, a lot of things are changing right now. And there's a lot of problems. And there's a lot of things that we're unsure of. But it's a matter of the banks and the investors that are willing to adapt. They're willing to see the potential and change and roll with it, that are going to come out on the other side of this. I said it before in a recent post. Millionaires are born out of recessions. Sometimes it's because they stepped on somebody. But a lot of times it's because they fought and clawed. They dug in deep. And they gave all they had, and they were willing to adapt and change and grow. Those are the ones who are going to come out on the other side of this. Don't panic. Don't freak out. Like, let's learn. Let's understand, because most people don't get it. Like I started in the beginning, and I'm gonna kind of wrap up with this. Most people don't understand where the money in banks even come from. Some people have this misconception that it's like magic. And it's not that they actively think, oh man, it's just magically going to work. No, they just don't actively think. That's the thing. They're just like, I'm going to go down to the bank. The bank just has endless pockets, right? There is no bottom. So I'm just going to go to the bank. I'll borrow some money from my car. I got my car partially paid off, right? So I'm going to see if I can get some money for the house. You know what? I want to remodel some stuff on the house, because the house I bought kind of wasn't exactly what I needed. So I need to do some remodeling. I need to get a personal loan, home improvement loan, a remodel loan. Where does that money come from? They give you the money. Why do you think they have just endless stacks of cash. They don't. That money comes from somewhere. It is a cycle, a very circulatory cycle. They got money coming in, they got money going out, and it just keeps a balance because the money doesn't stop moving. If it stops moving, that's when it starts to fall apart. It's just it. When it stops moving, it starts to fall apart. We got to keep all these things in perspective. I don't want y'all freaking out. I'm telling you right now, as far as Bank of America stock, I'm buying more. Blue light special. Y'all ain't got to buy Bank of America. I'm not encouraging you to. I'm not endorsing it. I'm just saying I'm not worried. Things are going to be okay. God has seen all this. God knows exactly what's going on. God knew all this was going to happen, and there's a plan in place. Sometimes it's not a setback, but a setup for something greater. And sometimes it's harder to see that when you're in the thick of it, right? You're like, man, I just keep getting knocked back and knocked back and knocked back. How can this be a setup for something better? Because I just keep getting knocked back. Trust me, it's going to be okay. That doesn't mean sit down. Okay, I'm good. Y'all knocked me back, I'm dead. No, don't sit down. Don't sit down and wait for God to fix it. I'm just saying, don't worry about it. Just keep moving forward. Keep taking action. Keep on to the next phase. So, like I said, take some time to learn more about economics. Y'all got questions, leave them below. Y'all got something you want me to dive into and explain a little deeper, a little more, I'm happy to do so. I love all the people who have given me feedback, who've left comments, likes, it sent me personal messages on Instagram or my email, TikTok, or Twitter. I appreciate all of it. You find your boy being CoreyB and message me. Or feel free to just message me here. Leave those comments below so we can open up a dialogue. I'm happy to talk about more things, but I hope that y'all can take away from this that banks close. Silicon Valley, there was definitely a mismanagement of funds, and there was definitely several variables that aided to their demise. Don't panic. Don't freak out. And if you've heard of BOA, don't freak out about it. It's going to be okay. It's going to be okay. At the end of the day, we're America. Our economy, it can be brutal at times, but it always has the capability of bouncing back and being bigger and stronger than it was before. I hope all y'all have a great night. I got nothing but love for y'all. Mad respect. I hope y'all continue to stay in tune. And I don't know if you've subscribed. Be sure to subscribe, ding your bell, get your notifications. It's your boy CoreyB. Y'all get cocky.